Hello everyone, welcome back. I'm Pallavi Sehgal and this is a recap of the important news of the week. Let's start with a bit of an overview. Here's a snapshot of what we'll be discussing. Tapestry Inc. buying Capri Holdings for 8.5 billion, Warby Parker's successful retail expansion, Allbirds still found struggling, Advent International set to acquire a majority stake in Zimmermann, and Kering acquiring a 30% stake in Valentino. With this overview, let's do a deep dive into the details. September is usually a month when most major merger and acquisition news are anticipated, but this time it looks like that the cycle has started a bit early, especially with the Valentino news and the Tapestry news. Here, the major story is that Tapestry Inc. is going to be buying Capri Holdings for $8.5 billion. dollars. Now, this merger makes a conglomerate bringing together Tapestry brands, which are Coach, Kate Spade, and Stuart Weitzman, and merging it with the Capri brands, which are Versace, Jimmy Choo, and Michael Kors. The group will have revenues in excess of $12 billion annually. Now, this helps Tapestry become one of the largest US fashion companies, bigger than VF Corp, which has revenues of 11.6 billion, PVH, which has revenues of 9 billion, and Ralph Lauren, which has revenues of $6.4 billion. Many are drawing parallels with European luxury groups like LVMH, Kering, and Richemont, but Tapestry has a long way to go before it achieves that kind of scale. For comparison, as mentioned above, the combined revenues of Tapestry are excess of $12 billion, and the annual revenues of LVMH Group are $90 billion, and Kering and Richemont each have annual revenues of approximately $20 billion. Scale aside, Tapestry has aspirational luxury brands, while most brands of LVMH, Kering, and Richemont fall into the exclusive luxury category, with products across all segments that cater to the aspirational luxury consumer. Nevertheless, this is a development that is interesting in the fashion and luxury business space, and it makes one curious to see how the brand portfolio is going to be developed and nurtured from here on. This brings us to some DTC news. We are going to be discussing Warby Parker and Allbirds next. Warby Parker is one of the successful brands of the DTC era, one that has been able to successfully transition from DTC to having considerable retail presence. It has been targeting annual revenues of 655 million to 664 million for a growth of 9.5 to 11%. And the company ended the quarter with approximately 217 stores. Its shares were up 6% to $15.25 in pre-market trading, and this shows that the Warby Parker success story continues. This brings us to a contrast of Allbirds. Now, Allbirds was once a darling of the DTC era, but Allbirds posted a decline of 9.8% in revenues to 70.5 million in the second quarter. While this exceeded the projections that were given, which were between 64 million and 69 million, Allbirds still posted a loss of 28.9 million in the quarter. With a transformation plan underway, halting of the retail rollouts towards a distributorship model for international markets, the brand is still trying to scale and it is being challenged by emerging sneaker brands. Allbirds is not the only one. A lot of DTC brands have been struggling, and they are struggling at two fronts, especially Allbirds is struggling at two fronts, which is one is maintaining relevance of their message, and the second is finding a way to scale profitably. We'll have more second quarter results over the next couple of days, and we'll see how other DTC brands are also faring compared to Warby Parker, compared to Allbirds. This brings us to some private equity news in the fashion and luxury space. As per the latest news, Advent International is set to acquire a majority stake in the Australian brand Zimmermann. Zimmermann has been a success story, and there is absolutely no doubt about that. It has 58 standalone stores across Australia, US, UK, Europe, and China, and it has been valued at 1.15 billion. This is on estimated annual revenues of 263 million. The founder sisters and Style Capital, which had acquired a 70% stake in Zimmermann in 2020 for 268 million, will still retain a minority stake in the transaction. Both Style Capital and Advent International have significant fashion portfolios. Zimmermann is already on a growth trajectory, and it will be interesting to see how it is accelerated from here on. Finally, coming to the Kering and the Valentino news. Kering is acquiring a 30% stake in Valentino, and this was definitely one of the big bang news that started the week. The 1.7 billion euro deal did soften the blow for Kering because of a news of profit decline as well as lower growth figures compared to other luxury groups. And we have seen that there are major shifts underway at Kering in terms of changes at Gucci and in the group in general. The acquisition does provide another growth engine to Kering besides Gucci, and Valentino has significant differential potential from other brands in the Kering group. One of the things that we wanted to highlight here is that we have seen that how LVMH acquires brands, it turns them around, turns puts them on a growth trajectory which maximizes their sales potential, at the same time preserving the heritage of the brand. And we have seen this example in terms of Tiffany, in terms of Remova, in terms of Birkenstock. And it's a testament to how LVMH has been able to acquire brands and grow them. Now, it would be interesting to see the playbook that Kering will follow for Valentino. Now, that's it for now, but we hope you keep tuned in for more. Thank you.